Welcome back to another episode of Primary Source China Investment. We hope you'll take a few minutes away from your NCAA basketball bracket this week to tune in. So last week, we talked a little bit about ESG, and this week we're going to get into it a little bit more on China policy. While China leads the world in carbon production, surpassing the US a few years ago, they're also doing the most to combat this issue. So today we're going to talk a little bit about the policies that are in place, the stocks that are benefiting from this, and the indexes around that.
ESG started a very hot topic in China. In my understanding, in China right now, probably they have the four level. First level, obviously, is the central government. They try to formulate the action plan for peaking carbon dioxide emission before the 2030, and then carbon neutrality in 2060. So that is the goal. Right now, the real focus is like the local government and the local leaders in all the industry. So right now, they started to learn. A lot of people pretty new to a lot of a concept. So you will see education articles, seminars discussing all across the country. And then I think we'll probably move to the corporate level. Right now, the largest state-owned enterprise, they already initiated some of the goals and take the actions. But many middle and small business, they still don't know too much about that. They heard it. This is a hot topic. What they can do, what they should do. Probably they need some help.
Yeah. So sure. When you say it's a hot topic, let's talk specifically a little bit about that. There is a lot of indexes and stocks and products that are chasing this ESG concept. And one that I pulled up was this MSCI ESG holdings. And a lot of those names are not names that you'd think of, like Tencent or Alibaba or Meituan or China Construction Bank. You don't think of them as ESG, carbon neutral, hydro, solar. You don't think about that. But you showed me on the A share, there are a lot of companies that are very focused on this.
Firstly, I want to distinguish two concepts. One is ESG. Another one is peak carbon dioxide emission. So that is a little bit different. ESG is a broader concept. It's covered all the carbon-related topics. I think right now, the China, a lot of the action plan or implementation plan or set up goals is all related to the carbon neutrality or reduce the carbon dioxide emission. So that is different. So the older fossil related energies, they try to minimize that and try to reduce the carbon emission. So that's caused a huge difference between like the MSCI. They think Alibaba is a good ESG company. Come on, this is the internet company. So with in a couple of the sectors, like the mental industry and related building materials, electronic, aluminum industry, that is the key industry they are focused on to reduce the carbon emission.
So some of the other companies that were in the list, like you said, the Alibabas of the world is not, it's not carbon neutral company, but on the A share, there's a list of companies. And I think you sent me a quick pick, and it does look like that has performed really well. And you're saying that the market's pretty efficient, that those names that are actually doing something, investors will pick up pretty quickly. Is that accurate?
That's exactly right. I think right now, in my understanding, China security market is pretty much like the mature market. You really can trade it like the mature market, very, very high efficient. So any good news or any value the company created, they can price in the price. It pretty much not over the night, it's over the couple of minutes. For example, like the Huayin and Dianli is a hydropower company.
Right.
And so from the carbon neutrality perspective, such kind of the hydropower companies will get a big benefit. because a lot of the it have the pretty much low carbon emission. So that's why the stock saw the 60% in a week.
Right.
Unless you prepared and do some research or follow this topic, otherwise you cannot keep up the pace with the capital market.
I see.
Yeah.
So for a summary here, China's doing a lot, but for the investor perspective, this looks like a long-term trend. It looks like it's going to be serious, even if I'm a little skeptical, but overall it's a longer-term trend and fairly bullish. Is that how you would summarize?
That's right.
Okay.
So that really means this is a long-term growth. I think not the 3-year or 5-year. That's normally capital market care about it. It's really like the 20-year, 50 years. Another very important I want to mention that in China right now, it's very hot topic for the carbon trade exchange.
Right.
So that's become the next wave of the trading in the capital market.
So that's a great place for us to stop. And that issue we're going to cover in capital markets at some point in the future. But today we're going to move over and talk a little bit about the bond market in capital markets.
Great.
The onshore bond market is massive. This is 15 trillion US dollar equivalent, and it's broken out into government bonds, corporate bonds, policy bonds, some banking bonds. The other thing we wanted to talk about before we get into this is where is the sovereign rates? China's yield is about 3.28 and they're single A plus, whereas Germany, France is a negative rate, and the US is currently quoted at 162, which is after a big pop. Of course, it's linked to the underlying currency, and the underlying currency has had some volatility, but we can see that the 10-year treasury has had low volatility in and of itself in China.
I think from the global perspective, the global negative bond market almost reached $13 trillion. So from our investor perspective, obviously, we should not invest in negative market. Rather, otherwise we can hold the cash.
Cash, yeah.
Yeah, it doesn't make any sense. The chart of the China 10-year Treasury bond ETF, as well as the US iShares 7 to 8 years Treasury ETF. So from this chart, you will really see China 10-year Treasury bond is still in the uptrend. But from the United States, you will see the volatility is pretty high. So that's caused a huge problem. But during the crisis time, like the China Treasury bond, it still looks fine. So it has very low relationship, it pretty much zero. And right now, I think maybe the correlation up to 0.2. So it's a quite low relationship. From the asset allocation perspective, it's a good way to diversify your bond asset.
For US investors. So US investor will convert to renminbi, hold that renminbi asset. They're going to get their 10-year return, which we quoted earlier as something like 3.25%. But you do have to take some volatility in terms of the FX risk, or you could hedge that risk. Correct?
That's right. The Hong Kong market offers a lot of the new tools to hedge the currency risk. Right. They can use the future or swap to hedge the risk.
Right. So now we've switched gears a little bit and talk about the corporate bond market. There's been a huge amount of growth, and there's been some fundamental changes in terms of how those defaults are being handled. And maybe you can talk a little bit about that. I have some charts we can put up as well.
The first trend, or the first big change is about the default. So in 2018, 2019, most of the default company are private company. But in 2020, the private company default rate was significant down. State-owned companies default rate get soared. So this chart will show the number of the default companies as well as the value of the default.
So your first point was you broke this myth that state-owned companies or large entities cannot default. So let's get back to those other points.
That's true. That really means staying out the company, you have to do your own research.
No implied guarantees anymore.
Exactly, yeah. And default, I think, is really related to the economy cycles. It's quite clear the China economy, they have the quickly change from the capital market. You can also, that is called a style of change. So because of the quickly change, that also changes the credit environment.
I want to end this section by reinforcing something you mentioned. You said the default rate has increased for SOEs and has decreased for private companies. Overall, that's viewed very positively, because now there's a way for capital to get reallocated into other higher performing, more market-based enterprises.
I think right now those default are still have no big impact on the entire market. That's a good thing. And the second good thing is pretty much all the institutional investors go to the fundamental. So I do see this like the one big state-owned company, they have the default over the night. They price in the market. The institutional investor sell all the similar related bond, the price gets dropped. So trust the market efficiency. That is the best way to do the investment, and also doing the diversifications.
So as we open up Chalk Talk, I wanted to bring up this issue of US-based ETFs and mutual funds. So the largest China ETF traded in the US is MCHI. That's got more than $6.5 billion in it. And none of those stocks are A shares. There are no mainland stocks. And the largest mutual fund is this Fidelity Fund that contains South Korea, Taiwan, and Hong Kong stocks. And there's nothing wrong with that. It's just a different allocation.
If you really want to invest in China-related thing, you have to find the fund which is have the exposure properly to the China market. Obviously, Asia is a good choice, but Asia have some restriction, and Asia also you can have the options. However, if you choose other Asia countries or areas, they may or may not have the exposure to the China market appropriately. They're all related to the China market, obviously, because they are very close to China, but they might not give the right exposure you want or you expect. For the risk, obviously, all the emerging market, they have a higher risk. They get a volatility. The risk one means the volatility, and the second means, in my understanding, not people not pay too much attention is the downside risk. That really means a loss. So as long as you can control the downside risk of loss, that means you will get a huge reward in the volatility market. So,
well, I actually looked at that. So I pulled up like a 20-year chart of the CSI 300 and compare that to another major market index like the S&P 500. So over that 20 years, the S&P 500 had something like 7 or 8% return, and the CSI 300 also had a 7 or 8% return. The difference was the volatility was more than 2 times the volatility of this S&P 500. So just following the rule of long-term investing, if you just put your money into your CSI 300, you would have taken significantly more risk than if you would have just put it in the S&P 500. And that's not to say, oh, don't invest in China, but you have to invest in China in a little bit more active way.
Personally, they do investment. The goal is really want to make the money. For SP 500 or CSI 300 index, obviously, that index is market cap based. So, but the key design and point is really reflect market volatility. So it's nothing to do about making money. So from the securities investment perspective, no matter what happens, you still need to figure out even fundamental or quant, whatever investment strategy you use, you still need to figure out the buy at a lower price and sell at a high. So I don't think in China market, it's still, right now it's a mature market. It really reflected the fundamental. So everybody really based on the fundamental, based on the valuation to make the investment right now. Obviously, previous year, they have some capital dominated movement, but right now, I think you should be comfortable. This is a value-based market.
So that brings us to our last section, which is forward-looking. And it was announced earlier that this week there's going to be a meeting in, of all places, Alaska. So in that meeting, there's already been some press going back and forth about Biden administration is going to take a firm hand, and we're going to do it on home turf. My opinion here, after a number of years on the ground and negotiating with a lot of government officials, is we should probably ask the Chinese what they want to achieve, because as everybody knows, you don't travel 8,000 miles without an agenda. And instead of trying to berate the Chinese officials, which is generally not a good negotiating strategy, it would be better if the Biden administration, and it's not about turning the page or pressing a reset button, but is to truly understand what the Chinese motivation is. And it turns out if you ask people, they will tell you. Peng.guo, what are your thoughts on the upcoming meeting?
In my understanding, China and the United States are two big countries. So nobody can beat those big countries unless itself. So you don't need to worry about any outside could cause the damage to the country unless you do some internal work not well. So I think both countries should really focus on the internal work, and for the outside, they really try to create obviously they have the competition and they have the cooperation. So they're not just a big competitor, they're really the biggest business partner. So it depends how you want to say it, from what angle you see such kind of the relationship. I think that's also a good way to talk and to negotiation and to find out what's the need, what's the what care for each party.
Globalization is not going backwards.
Yeah.
With that, we'll leave it to you, and we'll talk to you soon. And thanks for tuning in to Primary Source China Investment. Thank you.
Thank you.